Shall I buy a property in 2022? I'm sure you're all asking, is it the right time to buy a property? Analyzing property, I'm Makram Hani, and today we'll discuss elements of what we should look at, be cautious about, and do prior to buying property if we are gonna do so in 2022. Now, it depends on where you are in the world, the market is acting differently. There are some markets that had a bull run of few hundreds of percents. So few multiples of the original prices within the past few years. In such markets, the rentals sometimes are also peaking and the returns, the cap rates are going down. In those markets, you should be more cautious than others. While in the market I'm in Dubai, properties have not risen in a homogeneous manner. Some parts of the market have risen more than others, some have more value today than others, and some lag behind for reasons that may be fundamental or not. We need to understand all of those elements to be able to decide knowingly if we're gonna buy a property, why, if we're gonna sell a property we have and reposition, or if we are gonna decide to sit on the sides for the coming period. Now, remember a theory that a friend of mine always says. He says, defense is never a strategy. So taking the side is not a strategy. Offense is. Defense is between strategies, is a state that you take between two strategies. What we've done today is, again, I've taken a very simple property. I've taken a property valued at 1 million. I've taken a loan to value of 70%. And for those who are saying I want to buy cash, no problem, you can. I always assume a mortgage because I do believe that this is how property should be purchased. There's no other asset in the world that banks are happy to give you such long-term mortgages or loans on. And again, my theory still stands and will always do in my eyes, and unless the future changes the effectiveness of it, you're buying a property which is by nature growing in value and paying for it at the price today with currency that is by nature going down in value. So the gap is growing, and this is where you can have wealth. Okay, so what we need to look at whenever we're buying a property is how much value are we getting with time? Can we ever time the market? Do you know the top of the market or the bottom of the market? If you do, you would have made millions already, but billions. I've written an article a few years ago that talks about a customer of ours, and that gentleman who lived through 13 to 15 years that I've known him through without really investing in the property market, because he was always waiting either for the coming peak or for the coming bottom, and he never caught it. He understood the peak after the peak happened. He understood the bottom after the bottom took place. If you're buying in a market where fundamentals are right, where there are prospects for the future, there's no real meaning of you trying to time the market and find a peak and a bottom. A 5% more or a 5% less, if you're buying a property for the right reasons you should be buying property at, which is cash flow on a very long-term basis, most of the time does not matter. Because that 5%, although it's always better to get a discount of 5% rather than pay 5% more, yet that 5% over 10 years is 0.5% a year. That 5% over 20 years is even much less. And the risk of not entering, and here we'll talk about Fomo in a second, the risk of not entering the market is bigger than the risk of going in. Now, why is that? It's because If you have cash today sitting on the side, you have a guaranteed loss. While if you are in property, you have a probable loss. And if we compare a guaranteed loss to a probable loss or a probable win, then most of the time you would go with a probable loss or a probable win. Now, some of you may tell me I have cash. If asset values drop, I have achieved a growth on my cash buying power. I would tell him yes, but that's you timing the market again. I'm not a fan of that. I don't know how to do that. And I don't believe I know or you know of anyone who can do that except by coincidence, which generates survivorship bias, which is riskier than losing money. So I would always say winning money without knowing how did you win it is riskier than losing money in something you understood. Why did you lose and you expected a probability of a loss? Let's go back to the numbers for a second. Before that, let's talk about FOMO. If you have a fear of missing out, sit on the side. Because the minute that FOMO is at its peak, in general, people lose most money. Because it means that everyone is jumping on to that asset and that asset class. And guys, things, again, refer to fundamentals. Value is fundamental. And valuations, regardless of what it does in the short run, eventually will be impacted by fundamentals. Fundamentals of the income, fundamentals in the city, fundamentals in the region, fundamentals of the asset class. So, when we're looking at this property, guys, we have here an option of you buying a property for $1 million or putting your money on the side, and it's $1 million. Now, what I want to tell you is, you would tell me there's other options similar to going into stocks and bonds and buying gold. I would tell you, don't buy with more than 2 to 4% of your money commodities. And gold is a commodity. It does not pay you over time. Actually, it costs you to store it if you buy it in a physical form. If you don't, there's other reservations that you should have on that. Now, when you're buying anything, you need to have a diversified view. You wouldn't buy with every single penny you have property unless you're starting and that's the only money you have. Actually, I need to do a session on tokenization to explain to everyone the value of tokenizing property. And here, I'm far from talking about Bitcoin and the craze of cryptocurrencies, NFTs, or anything similar. I'm talking about taking the real asset and make it evolve, revolutionizing it through utilizing tools, technology like blockchain and the likes. And tech, guys, is meant to make our lives better. Tech is not a fancy thing that is for tech. Let me go back to our subject, however. I will compare $1 million sitting on the side, waiting for a crash. And this $1 million could have been sitting on the side for a few years by now. Or $1 million that is in a property in 2022. So the year here is 2022. And we need to compare both. Now, I will compare both, and I will take a scenario here where property here have dropped by around 30%. And property dropped by 30% is a big drop. Now, in some areas in my market today, a 30% will get properties at the price of the lowest of the pandemic, which I wouldn't call a market price, because if things are not trading, a one-off trade does not make a market price. It makes it a price of that point in the market. Yet for it to become a market price, there should be consistent trades at that level. As you know, when stock market is dropping and slipping, the stock market can be stopped. And if it's stopped, that there's no trading afterwards. And if there's no trading, there's no market price. So I will assume that the property prices will drop by 30%. However, I will rightly assume that we will not know when will it drop. And I will consider that it will take approximately 3 years for us to establish that 30% drop, unless you believe that tomorrow morning there will be a crash, an immediate crash of 30%. So if we will take 3 years for that 30% to start again, because when it starts dropping, it does not drop all the way through immediately. And if you wish, because some of you would tell me 3 years is a long time, we would have probably been way into the drop at that time. I would call it 1.5 years, because some of you may not see catalysts in the market for 3 years to go. I hope you see catalysts in the market today at least. So 1.5 years and the drop will start, and then the drop will take around 3 years, another 3 years to drop by 30%. And that 30% drop will be that million that you have here minus 30%, it means minus 300,000. Now I want to take that example and I want to see where would you be here in 4.5 years. So here plus 4.5 years. And where will you be here? Actually, you know what? Let me make this nearer to the rest, because I believe you're not seeing the side of the board over here, yeah? So if I have here the 1 million and I make it wait for 4.5 years, and here it's still 1 million, and I want to achieve a market entry here. So let's look at the best case scenario and your worst case scenario. Your worst case scenario here in 4.5 years is that you're minus 30%, while you've been on an average return of 80K minus the costs. For example, let's say the return monthly is 6.6K and the costs are 1.4. It means you'll end up at around 5.2K, which makes it around 60K net a year, which makes it 6%. So let's say here you've been earning 6% per year. And this 6% is cumulative, is compounding, but we will not assume that. So we'll not assume that there is no impact for the growth of the profit over time. We will say this 6% have multiplied by 4.5 years, and then after 4.5 years, we have two amounts. We have here in a value of a property, we have 700K, and plus we have in cash, which could have been reinvested at 29K. Actually, it's not much more than 29K. It's 29%, sorry. So let's remove this from here. And let's say it's 29%. 29%. While here, we have the 1 million and hasn't lost, hasn't profited. Now, if we consider, let me put the results here. Let me clear our board. Let me put the results for you. Again, memorize the results, yeah? So, the cash here, 4.5 years later, the cash here is 1 million. The property is 700K plus 29% of the original. So 29% of this, which is 290K. Now, in the worst case scenario for property, you are at 990K. In the best case scenario for cash, on common case scenario for cash, you're at 1 million. Do you see a big difference? That is considering that the drop of 30% here in value happened from the 1 million. In other words, the property from today did not grow by any further and then dropped. So if the property here have grown to 1.3 million and then dropped by 30%, the number will be higher than the 700K. But I assumed that this didn't happen. I assumed that what happened is the property value have grown by nothing, and the property value slipped from what it is today by 30%. if you look in front of you here, even if you have no growth in rent, you will have a similar value after 4.5 years. Do you really want to take the risk of waiting 4.5 years to get the same amount there at best? If we take the worst case scenario of property, and I don't want to call it the worst case scenario, I want to call it the worst case scenario of our situation, because someone can tell me that it can drop by 50, 60, 70%. I tell them everything is possible in investing. So yeah, it's the worst case scenario of this situation we've taken here, which is reasonable. We've taken reasonable numbers and conservative numbers here. Now, this said, guys, now the summary of this is obviously go buy property, not only in 2022, in all times. Yet, what I want to always tell you, make sure that whenever you're purchasing property, you're selecting the right one. You're buying property in a decent location. You're away from off-plan property that probably will be delayed, and not all off-plan property will be delayed. However, you need to be careful about the location you choose. What are you buying? And think of that. Someone is meant to live in it one day. The developer you're buying from. All of those elements do matter. So look at those with very much of caution. None taking any of the elements into consideration may make you end up having a mistake. And you don't want a mistake that can harm your capital and that can have can give you very difficult time to recover from where you are as a position. If you buy any investment with all the know-how that you need, and you knowing the risks and the opportunities, the prospects and the possibilities of failure in it, you will be comfortable regardless if the property or an investment, any asset, drops or grows in value. So last but not least, yes, do buy property over through 2022, as every single year, step by all through your life. However, be careful what property you buy. Be careful what kind of income does it give you. Do the right thing, and the right thing will work for you.